Today was probably one of the most volatile sessions that I have seen in a very long time. And we're not just talking about volatility to the downside. I mean, we saw the S&P 500 from lows to high today move about 8.6%, which is just nuts. Now, last week we had a massive loss on Thursday. We turned our short bots on Friday, and today made a pretty good profit. And now I'm removing a lot of my exposure to the downside. Because in last week's video, when we were talking about the Mag 7, we went over Apple, Meta, Amazon, Netflix, Google, and we talked about these major support areas, which would be not only great areas to buy long term, but where I think we will see a potential bounce. And most of those stocks hit those levels today, and most of those stocks bounced there today. So let's do an update, go through the charts, talk about my plans, and if I think that this is actually a bottom. Now, if you want to get access to all the indicators that you see here and learn our strategy for free, go ahead and check out our free course library. I recommend starting with the Elite Traders Playbook, as it will show you all of our indicators. And if you want to learn about smart money zones and how to spot market structure, which is one of the most important things, I would take the Smart Money Mastery course. Now, if we start first with the S&P 500 before we move into the Mag 7, basically most of the big tech stocks are moving in this same exact manner. For the past couple of years, we have been trading above the weekly market bias, which is this green tape indicator that I have my cursor over. Anytime we're trading over this level, that is bullish. Now, for me, what I look for is price to stay over those levels, but pull back into the bias. Once we pull back into the bias, I know that we have a discounted range and that I'm not overpaying. And that's normally when I will come over, turn on my trading bots in TrendSpider, and then have them alert me and the community within the Discord so that I can follow them manually. Now, the monthly market bias, which is this more, janky one that you see down here that's moving in a lot more rougher of a fashion, this area is very, very important because one, it's very rare that we actually come back and touch this level. And more importantly, once the weekly market bias breaks, as you can see back here at the end, or really the beginning of March, the first week of March, this is normally an indication that the next level we will sell off to is that monthly bias. You can see this happened here in 2023. You can see that during the 2022 bear market, the low that we pulled back to was that monthly market bias. And even in COVID, when we dropped 33%, we ended up bouncing right on that market bias. So my low that I was expecting on the S&P 500 was $4,800 or $480. And you can see that to absolute perfection, we basically tapped 482.88, and that was our bottom. So very, very good sign for now. Now, if we look at the actual Mag 7, starting with Apple, those levels were also the major support that we are expecting price to bounce off of. We said that Apple, worst case, would hit the bottom of the band, which would be about $180. So far, this has been our low. So I think there's a pretty good chance that maybe price continues to sell off to 160, but I think that we will see a dead cat bounce in the coming weeks, maybe back up to $200 or $210. And you can see that if we actually go over here, I have my Apple bot live, but it is not in a position because in order for it to go long in the first place, we must be trending over the 100-day SMA, which we are nowhere near doing that. So just because I think price is going to bounce does not mean that I'm necessarily taking a position. But if I was looking to get into Apple long term, this is a beautiful spot. Now, Meta also pulling back into that monthly market bias. However, we only tapped the top of this range. So there is still a chance that we could move another 20% down to 401 or 408. But I will say the major difference, if we look at this fundamentally, which I don't like to do a lot of the times because I like to just look at data and technicals because it's emotionless. Meta is least affected, next to Apple as far as tariffs. Now, the reason a lot of these tech stocks are fading if they don't even have to deal with tariffs is the thought of a recession and a global or US slowdown. So that's why as we go through Netflix and we go through Meta, you're going to notice they haven't sold off nearly as much as Apple or Amazon or some of these other stocks. So I think Meta is at a good place to potentially bounce soon, but worst case, maybe another 10 to 15% sell off. Amazon, much like Apple, pulled back to test the bottom of the band. Since we tapped the bottom of the band, we are up 10%. And if structure is going to hold, this must hold $160. If that does not happen, then we could see another one of these 2022 scenarios where we just sell off in perpetuity. But at this point, Amazon is looking pretty damn good, and I'm going to be looking to potentially turn my trading bots on in the coming weeks. Now, Netflix, you can see, is still holding the weekly market bias, but there's something I don't like. And from a technical standpoint, that is this head and shoulders pattern that is currently setting up. You can see that this support level where we have tapped multiple times now is going to be considered our neck line. Now, a head and shoulders occurs where we have a push up. This is our left shoulder. Price pulls back to a support level. Then we push up into a higher high. So this is what we want to see. This is normally strength. From there, what's different is instead of price pulling back to make a higher low like we have been, it's actually going to make an equal low. So the fact that we made an equal low here is normally an indication that we will get another bounce, much like we got here, and then price will sell its way off. In this case, that would be a downward move of about 34% to $640. I'm not shorting this setup. I'm not telling anybody what to do, but I will say I hate the way that Netflix is looking at this point. The other aspect is that if we move out to a monthly and we look at that BX trender at the bottom, showing a lower high 2 months in a row, which is normally an indication of a continued sell-off. So I think there's a chance Netflix can move maybe another 10 to 15% to the downside. I wouldn't be touching this personally unless we're at $600. Now, Google, much like Amazon and Apple, have both pulled back into this monthly market bias, hitting the bottom of that band, and since then we are up about 5%. This is setting up the same way that I think is going to happen with Apple and everybody else. I think there's a good chance that we bounce, move back up to 165 or 170, and then potentially reject at that weekly bias. So to wrap this up, I believe short term we have probably found our bottoms. That said, I do think that this bounce is probably going to be a dead cat, meaning that we will get a very strong rebound, because the thing you have to understand, I'm not going to get political here, but it's not like what's occurring in the market is because of the jobs report or the health of the economy or interest rates or inflation. There are some aspects to it, but this is all self-induced, right? This is because of the tariffs, whether you believe in them, or not, or whether you think they'll work long term or not. But that means that as fast as the market has fallen is just as fast as the market can recover if, which I sadly don't think is going to happen, if Trump were to remove them or if Trump were to pause them. So understand the fact that this is self-induced means we could have a V-shaped recovery the same way as COVID, right? COVID wasn't necessarily self-induced, but it was a pandemic that once it cleared up, basically the market came back just as fast as it did prior, as opposed to things like 2022 with hyperinflation, which was not I guess you could say it was self-induced through QE and everything through 2020, etc. But my whole point is you can't just remove some policy and then the market fully recovers, which is essentially what could happen right now. And that's why my goal is not to sit here and try to assume what is going to happen, what's not going to happen. I'm just waiting for stocks that I really like to pull back into massive support zones. Then I turn on my trading bots and I let them alert me when it's time to buy or sell. Guys, let me know what you think down in the description. Let me know if you went buying today. Go ahead and check out our free courses if you want to learn everything I know about trading over the past 10 years. And if you want to get access to my real-time bot alerts and my real-time trade alerts, go ahead and join our Discord community. The link is in the description. We open 10 slots each and every single day. So if you want to join, go ahead and apply. You can also use the code BX50 to start for 50% off your first month. I'll see you guys tomorrow.